Hey, good afternoon, morning, wherever you may be. Welcome to my Redfin live update. And this is a weekly update I do on the Redfin weekly housing data. And it's absolutely like madness wouldn't describe the housing market right now. It's it continues to surprise me every single week. And I've only been in real estate, about 7 years. So it's strange in that short a period of time what I've seen transpire in the market. And one thing is for sure, um, it's confusing for a lot of people because prices, as you'll see today, continue to rise. And we set a new record for housing payments. So housing payments right now are at an all-time record high. They actually have eclipsed last year at the height of unaffordability, and now they've set a new record according to Redfin. So it's a tough market for buyers. It's a great market for sellers. So sellers continue to ask more and more for their homes, and they're getting it. And what you'll see today is that sellers are getting about what they're asking for homes. So sellers are about 99%, they're getting about 99% of the asking price. And again, never a dull moment in the housing market. Okay, so these live Redfin videos, they're meant to give you and who's watching this, on the live or on the recording, the most up-to-date, accurate housing market data available. And we can do this in a variety of different ways, but what we're doing today and every week is using Redfin. The cool thing is Redfin has the website they use that you'll see that I'll share today. You can go there anytime you want, look at the national data, look at the updates. They send out the update at about 10 a.m. Eastern every Thursday, usually. And so you can look at the national update. You can also look at your local listings or your local market and find out what's happening in your local market. And you can look at the metro level, the county level. You can even export the data. So you can really dive into it. And I think that's powerful information. So it's good to look at it from a macro end, what's happening nationally. And then that's what we'll do. And then we'll dive into the Columbus, Ohio market where I live and work as a realtor and investor. And then I'll take some questions at the end. So if you have any questions, please post them below in the comments. I'll take some questions. And if you have a market you'd like me to analyze, post that too. So if you have a market posted, even if you're watching this after the recording and, it's a week or 2 weeks later, post in the comment what market you'd like to see. And I'm happy to dive into that on the next live and dive into that analysis. So yeah. Let's get started. All right. I'm going to share my screen. And this is just unbelievable what we're going to see here. All right. So the title of this Redfin article, again, this is fresh off the press, published today at about 10 a.m. Eastern. Housing market update. Monthly payments set a new record. And buyers' cost will likely stay high on inflation news. So CPI came out a few days ago, actually yesterday, I guess. And because CPI was so high, various things happened in the economy, including the 10-year Treasury went up past 4.5%, and that spiked mortgage rates. Today, when I checked, mortgage rates from Mortgage News Daily were at 7.35% this morning, or 7.34 this morning. And just a few days ago, they were at 6.91, I think. So what you're going to see in this Redfin article is that not only they're saying housing payments set a record high, but what's important to know is that that's using a rate, I think, under 7%. And so if you look at the rate at a 7.34, you're definitely, and now with the housing prices the way they are that you'll see today, you're definitely at a record high as far as housing payments. So it's crazy to think, right? Like housing payments are more expensive now than they have been ever. Like we've never had this. The median house or the average housing payment has never been this high. But people still keep buying, and a lot of people are trying to tell people not to buy. Like, don't buy right now. It's a horrible time to buy. Um, but what I just would caution you against that and say it may be a bad time for you to buy. It may be a good time for you to buy, but nobody can make a blanket statement and say it's a bad time to buy real estate. It's a good time to buy real estate if it makes sense for you. If it doesn't make sense, it's a bad time to buy. And only you can make that decision, really. So today I'm hoping to give you some data and you can make those decisions. So let's dive into the article. Daily average mortgage rates reached their highest level in nearly 5 months following Wednesday's hotter than expected inflation report, which will likely keep mortgage rates elevated for the foreseeable future. And comment below if you if you've seen this, if you're experiencing high mortgage rates, maybe you're out looking for a property right now. I'd love to know. I'd love to know more. I'd love to know if you actually are seeing those rates and what you think about them. So please comment below on that. All right, so let's go back to this. The median monthly U.S. housing payment hit an all-time high of $2,747 during the 4 weeks ending April 7th, up 11% from a year earlier. Housing payments are soaring because home prices and mortgage rates are high. The median home sale price is $378,250, up 4.5% year over year, and just about $5,000 shy of the record high hit in June of 2022. The average 30-year fixed mortgage rate is 6.82, below the near 8% rates hit last October, but still more than double pandemic era lows. So rates continue to go up, and prices do too. And so this confuses a lot of people. A lot of people thought when rates spiked, home prices would plummet. But in reality, what happened was the rates going up the way they did actually helped home prices stay high because it kept a lot of sellers from selling their houses because they couldn't afford to buy the next house. You'll hear people on YouTube say, well, the high interest rates are keeping it makes it unaffordable for sellers to sell. But in reality, it's really about buying the next house. So if a seller, sells a house that's normally, like, let's pretend like here in Columbus, the median is 300 grand. This month it's about 300 grand. So at $300,000, they don't want to sell that house with a 3% rate if they're locked into that for 30 years, just to trade up into a bigger home at a 7.5% rate or whatever. So because they're not selling those houses, they're not hitting the market, and the inventory, especially affordable inventory, and that's what everybody misses. Like, you'll hear people talk about inventory going, inventory went up, woo, market's going to crash. But what they fail to really analyze, and if they just looked at their local market, they would understand this. Luxury homes, higher price homes are hitting the market. Maybe houses that need a ton of work or in flood zones are hitting the market, but houses that people want or can afford, those are off market. Those aren't hitting the market because when they do hit the market, they're so rare, people want them and they buy them immediately. So that's keeping the median price afloat because there's not a ton of inventory that's priced. If your median's 300, there's not a ton of $200,000 houses that are sitting on the market, driving down the prices of homes that are affordable. They're just being snatched up. So the only homes that are sitting on the market are homes way over the median or homes that nobody wants. And because of that, the median price is continuing to be stagnant, sticky, or even go up nationally and in many metros. So that's what's happening with the prices. Prices are stubbornly high because there's enough home buying demand to prop them up. Redfin's Home Buyer Demand Index, a measure of requests for tours and other buying services from Redfin agents, is at its highest level since July, and a separate measure of tours show they've increased 33% since the start of 2024, much bigger than last year's increase over the same period. And even though supply is picking up, new listings rose 14% year over year. Inventory is still low compared to typical spring levels, meaning there's competition for many of the homes that are on the market. Mortgage rates, the other factor driving up monthly housing payments, remain elevated because the Fed has kept interest rates high so far this year. Daily average mortgage rates jumped to their highest level since last November this week because the March inflation report was hotter than expected. After rising last week because the latest jobs report showed a stronger than expected economy. Redfin says, for home buyers, the latest CPI report means mortgage rates will stay higher for longer because it makes the Fed unlikely to cut interest rates in the next few months, said Redfin economist research lead Chen Zhao. Housing costs are likely to continue going up for the near future, but persistently high mortgage rates and rising supply could cool home price growth by the end of the year, taking some pressure off costs. This is the third report in a row, by the way. I'm just double checking the date because I keep seeing this. I keep seeing this comment at the end of their updates about rising supply could cool home price growth by the end of the year. Let's hope so, right? I mean, I'm a realtor. I'm an investor. I own assets, own multifamily and single family houses. And I, help people buy and sell them as a realtor. And so you'd think I want like home prices to keep going up. I don't. I would rather them cool off and remain somewhat stable. And I would rather it be more affordable for people because in the long run, it's better for the economy. It's better for, I believe, home buyers to have a balanced market, but we're nowhere close to a balanced market. We're not. And I'll explain that in a second because we do have a rise in active listings. Months of supply has increased, but even if it hits 4 months, which is considered balanced by some people, it's not balanced if the supply are houses nobody wants or houses that are too expensive. Then that supply is, to me, is kind of useless. All right, so let's dive into the leading indicators. Daily average 30-year fixed mortgage rate, 7.34. Excuse me, guys. Up 6.91%, up from 6.91% 2 weeks earlier. Highest level since November 2023. Up from 6.52% last year. Weekly average 30-year fixed mortgage rate, that's the weekly average, 6.82. Mortgage purchase applications declined 5% from a week earlier. They're down 23% year over year. So people, I hear a lot of people and even some clients of mine have said, well, because inventory is rising and because mortgage rates are rising and because mortgage purchase applications are down like they are here year over year and even week over week, that, means that things are going to crash because the inventory is going to explode. But buying demand, mortgage purchase applications, and Redfin Home Buyer Demand Index has been low and really pathetic for the last, month, several months now. Maybe even, I have to look back, maybe even a year. So it's like, if it's been that bad, yet inventory is slightly rising, people are still buying, and prices are continuing to go up, what happens if mortgage demand increases at all? Well, then you're like doomed, right? Then you're in a double-digit price increase probably. So rates right now being 7.5% is probably the best thing we can have. Maybe they need to be higher, but right now the rates the way they are, it's still not keeping people from buying houses. People are still purchasing houses. Touring activity. Let's do Redfin Home Buyer Demand Index, up 7% from a month earlier, the highest level since July of 2023. It's down 6% year over year. Redfin Home Buyer Demand Index is a measure of requests for tours and other home buying services from Redfin agents. So they're saying it's up from a month earlier, to its highest level since July of 2023, down 6% year over year, though. So it's starting to increase, no doubt, but mortgage applications are still down a lot. Touring activity up 33% since the start of the year. At this time last year was up 9% from the start of 2023. Last year's increase was much smaller, partly because this was Easter week in 2023. Oh, okay. Well, I'm not sure that means anything, but I guess, maybe it does. People take the week off for Easter, I suppose. But it's up 33% from the start of the year. So that's what? That's a delta 24%. So is it 24% higher than it was last year? I don't know why they don't just say that. It always drives me nuts. Google searches for homes up 4% from a month earlier, down 9% year over year. So people are looking for homes on Google more. All right. US highlights. Now they take the top 400 US metros and analyze them to come up with these next stats. Median sale price. Give me 1 second. Let me. Put my little cursor here. I think you can see it. All right. Median sale price, $378,000, up 4.5%. Median asking price, $410,000, 6.5% year over year increase. Biggest increase since October of 2022. So people continue to ask more and more for their house, and you'll see that they're getting it. Now, remember, this is median asking price, and these are median sale price. So when you talk about median, it's lining all the houses up in a row and picking the one right in the middle. It's not average, it's median. So something to keep in mind is that there are houses above the median, right, in sale price and asking price that hit the market. So if you're in a market like Columbus, for instance, where median is 300,000 and you list a home at 800,000, well, that's going to drive up the median asking price. And if it sells, it'll certainly drive up the median sale price if more of those homes sell. But the point is that just because median asking price is rising, that doesn't necessarily mean that median sale price will follow that, because a lot of people who are listing their homes for sale on the higher end, those may sit a while and never sell. They may be luxury homes or homes that are just overpriced. Median monthly mortgage payment, $2,747 at a 6.82% mortgage rate. So now that it's 7.34%, it's definitely going to be a record high. All-time high. Look at that. 11% higher than last year. Pending sales, 84,000 units, down 4% year over year. New listings, 91,000 units, up 14% year over year. Biggest increase since June of 2021. Year over year increase was large, partly because Easter fell during this time period in 2023. So if you look at the new listings, 91,000. Now look at pending listings. Pendings when a contract goes on the property and it goes in, a buyer and seller have an agreement on the property to start the contract process. There's a delta there, right? How much? 6,000, 7,000, right? About 7,000 units. So theoretically, how I would look at this is active listings now would gain 7,000 units in the United States for the 4 weeks, right? So it's not a ton because pending sales have taken most of those new listings. So it's hard to gain inventory when pending sales, even though they're really poor right now, they're enough to keep a lot of the inventory off the street as it comes on. Active listings, 819,000 units, 8.2% increase. You'll hear people, I heard a guy yesterday say, we only need 800 to 900,000 new listings to be a buyer's market and for prices to fall. All right, we're at 800,000 listings. So prices haven't fallen yet. Why? Because when I look at the data, what I see is that active listings need to be much higher. Before the pandemic, they were like 1.1 million. So they definitely need to be higher, and they have to be in houses that people want and can afford. If they're not, then the point that there's, if they're all $800,000 homes in a $300,000 market, people aren't going to buy those, and it won't drop the median price. And somebody shopping for an $800,000 home is not the same person shopping for a $250,000 home. And that's what most people want, right? Or $250,000, $350,000 houses. They're not looking for $800,000, $900,000 homes. Months of supply, 3.2 months, up 0.4 points. 4 to 5 months of supply is considered a balanced market. And that's true. I view anything over 5 months, if you go 5 to 7 months, I view that as a seller's market, and 7+ months, I view that as a strong seller's market. I'm sorry, 5 to 7 months is a buyer's market. Anything over 7 months is a strong buyer's market. Conversely, if I look at anything under 2 months of supply as a strong seller's market, and then 2 to 4 months of supply is a seller's market. So that's how I view it. I don't just view it as sellers, balanced, buyers. I like to segment it a little differently, but there's no doubt that it's still a seller's market nationally. Now, remember, real estate is local. It's localized. So in your area, you may see some houses in some streets and neighborhoods where houses are sitting, and you're thinking, well, I see price cuts. I'm seeing my market come down. Maybe you hear about updates like I'm doing for Columbus. Maybe you hear about it for your neck of the woods, and you're like, well, prices are coming down here, Jason. I don't know what you're talking about. But remember, if prices are rising nationally overall, that means if there are markets dropping, there are enough markets rising to balance that out and increase overall prices. So yeah, there are markets that are crashing probably in prices because of an explosion in inventory, but there's also a lot of markets that are not, and their prices are going up and inventory is dropping. Share of homes off market in 2 weeks, 42.5%, down 44%, down from 44%. So homes actually are taking a little longer to sell, it looks like. Or they're, I guess, the amount of homes that are actually coming off the market in just 2 weeks is changed, and it's down from 44%. Median days on market, 37, down 1 day. So it's taking a little less time to sell homes overall when the median is 37. Share of homes sold above list price, 28.4, essentially unchanged. So 28% of homes approximately are selling above what they're listed for. Share of homes with a price drop, 5.8%, up 1.5 points. You'll see this on the chart in a second. Yeah, share of homes with price drops keeps going up. And people are like, well, why then aren't we seeing the discounts? Well, because the people that are dropping prices aren't selling their houses a lot of times because they may be houses priced outside the median, or, decrepit houses that, need hundreds of thousands of dollars worth of work. Average sale to price list ratio. Pay attention, folks. 99.1%, up 0.3 points, meaning sellers are getting about what they're asking for the house. Like there's less than 1% difference in what they're getting versus what they're asking. So the notion of like, I'm going to write a lowball offer and get it accepted, if it's a house that people like and want, you're not getting that. You're basically paying what they're asking, or they're going to sell it to somebody else. And I know this for a fact because I'm listing houses right now. I'm helping people buy houses. And generally speaking, people are getting asking price. The good news is they're not, most people aren't going way over asking. It still is happening with affordable homes, unfortunately, but it's not like it was a couple years ago. So at least it's not way over asking, and that's a good thing. All right, metro level highlights. So this is where Redfin looks at the top 50 metros in the United States and top 50 most populous metros. You can see here on the screen. They also make a note, select metros may be excluded from time to time to ensure data accuracy. I think sometimes they have a problem pulling data from different metros, so they exclude them. But anyway, they're looking at the top 50 largest metros. Anaheim, California, West Palm Beach, Florida, Pittsburgh, Pennsylvania, San Jose, California, New Brunswick, New Jersey. These are all the metros with the highest year-over-year increases. Metros with the biggest year-over-year decreases, one, San Antonio, Texas. It actually made the list last week too. It was under 1%. So out of 50 metros, let this sink in. I mean, let this sink in for just 1 second, right? Let this sink in. You've got 50 of the most populous metros in the United States. And of those 50 metros, only one of them had a decline year over year in price. That means that 49 of the 50 had an increase year over year in median sale price. So is a crash coming? It could be, but it's not here yet. And there's probably people on the sideline right now, like mummified, mummified from waiting for a crash. And one day they'll get sick of waiting. And maybe they just will never buy houses or property, which is okay. It's okay to do that. So you don't have to buy real estate. This isn't Russia. You don't have to do something. You can, just rent. It's not a big deal. So if you don't feel like buying a house, don't buy one. And if you think a crash is coming, keep waiting. All right. Pending sales. But go back for a second. Let's look at this. Anaheim, California on the median sale price increase, by the way, 22%. And the other areas, West Palm Beach, San Jose, and New Brunswick, they're on the list like all the time for increases in median sale prices. It's just crazy. Now let's look at pending sales. This is a house that's gone into contract. San Jose, San Francisco, Cincinnati, Nasty Natty, Milwaukee, and Seattle all had huge increases in the number of pending sales. Atlanta, Houston, whoops. That's my fault. Atlanta, Houston, Nassau County, New York, Fort Lauderdale, and West Palm Beach, Florida, all declined the most in pending sales. So one of the things to look for is if pending sales are dropping, but new listings are going up, then you could see an explosion of inventory and maybe some softer prices. But if you see pending sales drop and no new listings are being added, that's just going to lock up the market like it has been for a long time now. But look at some of these pending sales. I mean, San Jose, 22% increase in pending sales, and their year-over-year median sale price is up 13%, almost 14%. So, wow, they've got a higher sale price, and they have a lot more activity than they did last year. 22% more. That's crazy. I'm surprised Cincinnati here in Ohio was 5.7%. So much more activity than there was last year in a lot of these areas. They actually increased, pending sales increased in metros. So things are picking up, I guess. New listings, homes for sale. Look at this, San Jose, California, 56% increase in new listings. So it's like, if you look at this, San Jose, 56% increase in new listings, 22% in pending sales, median sale price up 13%. So like San Jose is like on fire, right? There's a bunch of new listings, more pending sales, and prices are going up. Looks like people are buying in San Jose. I'd love to know. And if you're getting value out of this video while you're watching it, hit the like button. I forgot to mention that. But please do that for me, because I have to take hours out of my day to do this stuff. And if it benefits you, if it doesn't, don't hit the like button. Let's see. We would know. So new listings. Yeah. And then look at where they're down. Newark, New Jersey, down 3%, Milwaukee 3%, Chicago 3%, Rhode Island 2%, Cleveland basically flat. So new listings declined in 6 of the 50 metros. So new listings are going up in a lot of metros, which is to be expected because inventory has been so pathetic. At some point, it has to go up. All right, time to visualize the data. Median sale price. Look at this. 4-week rolling average of the median sale price. Boom. We're now at $378,000. $378,000. So I thought this line would kind of go through here eventually. It may still, but I expected it once we kind of went this way. I was like, well, even despite my belief in the data, it's hard to imagine the prices continuing to go up, but they are. And, it doesn't seem like they're slowing down right now. If they go over the record, which is we're about $5,000 away from the record, it'll be something for the books. That's for sure. Like that week would be crazy, right? New listings up a ton, maybe, right? You would think mortgage payments are still going to be elevated probably. And now we set a record in prices. Unbelievable. All right. Median asking price, 6.5% year over year increase. It's now at $410,000. So it's like up like this, right? Up. And again, I believe that's because more expensive houses are hitting the market. That's what I see in the data in Columbus anyway. Unfortunately, I don't have that detail of listing information outside of my market. I just don't have access to it. And to look at that data, by the way, you can ask a realtor, contact a local realtor and ask them, you want to see a breakdown of active inventory by price point. You want to see new listings. Well, 3 things: new listings, actives, and solds by price point for the areas you're looking at. You don't want to just ask them for new listings, actives, and sold. That's what everybody will give you. All the realtors are just reproduce that information from their local board. That's junk because it's an overall view. You want to look at the price points because I can almost guarantee you the higher price point houses have much more inventory than the lower price houses. Here in Columbus, we have less. We have 7 new listings dropped 7% year over year for the month of March for houses priced under the median. For houses priced over the median, inventory actually, we had 8% increase in new listings. So a big swing there between over and under the median. Home buyer housing payments, 11.3% year over year increase. Just nuts, right? Way over. Look at where it was way back here in 2021. Wow. Those days are gone. Huh? Pending. And by the way, this is why people aren't selling their houses. This is why you don't see any inventory, because there are people that are, getting antsy on the sidelines and they're like, I just want to sell and access my equity and, get my cash. I've actually helped some people sell some houses recently that did that, and they moved to some actually more affordable areas. But overall, people are like, I'm not going to trade in this rate and this payment. I mean, why would I spend another $1,000 a month, more than $1,000 a month for my house? I mean, that's crazy. I'll just stay where I am. I mean, you can get a home equity loan probably and like do an amazing renovation on your house for the difference in housing payments and not have to worry about moving. Now, if you have to move, you have to move. But if you don't, maybe you just hang on to your house. And I've heard people say it's a great time to sell your house. Well, is it? Maybe, but it may not be. I mean, it may not be a great time to sell your house. Only you make that decision. Pending sales down 4% year over year. So this has kind of gone wonky, right? It's gone this way now. It'll be interesting to see if it goes over last year, right? But right now it's not. Right now, pending sales are pathetic, and that is no doubt hurting the industry nationwide with realtors, mortgage officers. Construction guys seem to be just as busy, like electricians and whatnot. They seem to be just as busy. Inspectors, title companies, those are guys who are all hurting right now. If you're in real estate and you don't own rental properties, you got to, I scratch my head and wonder why. If you're a title person, mortgage, realtor, broker, and you don't own rental properties and you don't have cash flow assets, I don't get it. How you can spend time in the business and see that opportunity and not take advantage of it. And it helps in times like this when you may be slower. New listings up. Good. Need more new listings. Right on. 14% increase year over year, 91,000. Active listings of homes for sale up 8% year over year. This is not going up anymore. Now this is going sideways. And again, the worst thing in the world would be for this to continue to go sideways or heaven forbid down a little bit and then mortgage rates drop. That would be really bad for prices because prices would just go boom and explode up. You'd have a bunch of people hit the market and, you know, all of a sudden the person who couldn't afford the $500,000 house now can afford the $500,000 house because rates are lower. And then that house is off the street now. That just wouldn't be good. So hopefully active listings continue to go up. 3.2 months of supply. This is a month of supply is basically how many months we would have of supply at our current sale pace if we did not add any more new listings. That's up from last year, but it's not skyrocketing upwards by any means. Not at all. 43% of pending listings under contract within 2 weeks. It's about where it was last year. Homes sold in a median of 37 days. Again, about where it was last year. Follows the trend, seasonality, where it's going down because houses are selling quicker in the spring. That makes sense. Then it goes up during the winter. No surprise there. I think this one's interesting, though. 28% of homes sold above final list price. It's actually more than last year. Right? So we actually have more homes selling above final list price. And again, I'm convinced that's because the affordable homes are so scarce that when they do sell, people are willing to pay at least what they're asking, if not more, on the affordable homes. 5.8% of listings had price drops. Look at the price drops. It's just like boom, straight up. And it confuses. I think it's entertaining as can be to watch people try to analyze this and scratch their head and go, well, why aren't prices dropping then? Like, why is the median sale price dropping? Well, pull your market data in your local market and use a spreadsheet or use ChatGPT even. It'll tell you if you put the data in and look at where the homes are being cut, where the price cuts are. Are they the move-in ready homes that are 300 grand that everybody can afford? No. They are the homes that nobody wants or are overpriced. So, okay, the share of homes that have price drops is growing, but not the affordable ones or the good ones. Average houses sold for 99.1% of final list price. So when you see a house listed with the price that they have it listed at, most buyers, when they make the offer and after the negotiations are done, dang near what the seller is asking for. They're right at that price. And again, I know because I'm working with buyers and sellers, and everybody's getting asking pretty much, or they're having to pay asking. And I've been in a couple negotiations where we send a price over that's, maybe 5% off list, and the response is list. Like they actually counter with list price. And their attitude is like, hey, I know this house will sell. It's a great house in a great area, move-in ready. So I'm not discounting it. And, in some cases, buyers retreat, but in a lot of cases, they comply and pay that price if they want the house. Redfin Home Buyer Demand Index. Down 6% year over year. Now they're saying it's going up. I guess it is. I don't really put much stock into this thing. I don't know. It's their little algorithm. So I don't know. It's not my favorite. metric. But that's the national picture, folks. Like we'll move on to Columbus next, and then any other local metros. But there's no doubt that prices continue to go up in the face of higher mortgage payments. So comment below, because I'd love to know, do you think people will keep paying these higher prices? Is it better to rent right now? Maybe it's better to rent. I've had that. I posted that on my YouTube channel as far as a poll, and a lot of people thought, well, it's better to rent right now. That's fine. Maybe it could make sense for you. All right, let's do Columbus. All right, so this is the metro/county level information that you can access. And again, really the same type of data in visualization, just for a metro or even a county level. But we're going to do Columbus, Ohio. I'm going to take off 21 and 22 because it just clears up the chart a little bit. So let's look at median sale price in Columbus. And this covers Franklin County, which is Columbus, and then the surrounding counties. I saw this earlier. I just had to laugh. $331,000 the median sale price. Columbus Board of Realtors at the end of March had it at $300,000. So this is over the last 4 weeks, not necessarily just for March. Maybe that's the difference. Or they're capturing data at different times, but $331,000 is what we'll go for Redfin. And that is up 5% year over year. I see zero relief for people in Columbus with pricing, zero relief. It just continues to go up. And we hit a record of 341 back in June and July of last year. So we're getting there. We're getting to the point where we could easily eclipse, no pun intended, eclipse last year. And I don't see it stopping, mainly because of the demand here in the Central Ohio market is huge. It's huge. It's because the secret's out. This is like to me, one of the best areas to live in the United States, because of the cost of living. The traffic volume is low right now, at least right now. And I'm going to take my cursor here. Give me a second. Shoot. My fault. Technical problems. Okay. Sorry about that. My cursor's messed up. I can't figure out why. But the demand here is crazy. It's a great spot to live, low traffic, low cost of living. And then Intel is here now building one of the largest semiconductor plants in the world. It's like 10 minutes from where I live. So there's zero housing already. And now you're bringing in a bunch of people. Demand's just going to keep going up. I can't see how it won't. There's nowhere to live. Not even expensive homes. That's the crazy part. And they're not building anything either. The new building here in Columbus is pathetic. Pathetic. They should have got on that when they heard about the Intel announcement, but people really haven't. All right, let's look at new listings in Columbus. New listings in Columbus down. Look at that. Look at this. Unbelievable. We're actually down year over year. 0.7% down year over year. Unbelievable. It's literally like everything that hits the market in Columbus just gets gobbled up. And because new listings aren't exploding, inventory is not exploding either. Let's look at active inventory. Active listings. It is, see if I can zero in on that. I can't. Oh, let me go uncheck this and this. Now I can maybe. up 3.81% year over year. Nationally, it was up 8%, I believe, active inventory. But in Columbus, only up 3.81%. And I can almost guarantee you that's all houses over the median, or most of its houses over the median. Yeah, it's just not headed in the right direction whatsoever. Zero good news for buyers. Let's look at months of supply. Slight increase, 0.7 weeks. That's 9.3 weeks of supply. So, we're still not close to 3 months of supply. We're still just over 2 months of supply. And anything between, anything under 4 months of supply is really still a seller's market. It's definitely a seller's market in Columbus, no doubt. Let's look at the pending sales. And they actually have homes sold on the Metro list, which is different than the national one. They don't put homes sold for some reason. Let's look at pending sales. Up 2.9% year over year. So finally it's up. It was up last week too, but it's only up slightly now, probably because active listings and new listings are so pathetic. It's hard to get more sales year over year when there's no more inventory. I mean, it's hard to get lower than where we are right now. Homes sold. So it's going up, like the trajectory's up. We're still under last year. And so the small amount of inventory we have is selling. And so it is the trajectory's up, but it's still worse than it was last year. I mean, a lot of people here in the market, a lot of colleagues of mine in the industry were asking, can it get worse than it was last year? Can sales get worse? Mortgage officers are asking me the same thing. Loan officers, hey, how's demand out there, Jason? What's going on the street? Well, we just need more inventory. We really do. If we had inventory, there'd be a lot more pending sales and a lot more closes. Let's look at the average sale to list price ratio. Over 100% now. Wow. I did not see this. I didn't think this happened. We actually we're down compared to last year. So last year at this time, we were at this doesn't even, it's so small, the difference, but we were over 100,000. I'm sorry, over 100% last year. This year, we're over 100% as well. Not good, right? Nationally, 99%. In Columbus, over 100%. So people aren't bidding. There's not like a lot of bidding wars like there were. There are still multiple offers, but they're bidding wars. I don't see a ton of them anymore, but people are paying over list price on average for the house. So that's, but that's to be expected when there's no inventory and high demand, right? That's definitely to be expected. So no shocker there. Let's look at days to close. And then let's look at median days on market. Down, man. Okay, so we're at 37. Nationally, it's 37, up slightly from last year, but not by much. And it's headed down, which it always does this time of year, I suppose. Like if I bring in 22 and 21, I'm betting it's probably the same way. Yeah, they all go down this time of year because springtime, people are moving around, buying houses, and people are out looking at houses because it's finally warm out. Though it's been a really mild winter here in Ohio. So, all right. Well, I don't have any comments because it's a strange time to do it. But if if you're watching this on the replay and you have a market you want to analyze or you want me to analyze, please hit me up in the comments on the channel. I will do it on the next live. I do these every Thursday Thursday or Friday, once Redfin puts out their update. And so feel free to leave a comment. I'll get to that metro. And thank you for your time. Please do me a favor, hit the like button, consider subscribing. I do a lot of other videos about real estate nationally and here in Columbus. And I have a couple videos coming up that show you how I buy or how I find opportunities. Because, let me take this off. Because one of the things that people are struggling with right now, if you do want to purchase a home or an investment property, something everybody's struggling with right now is finding deals, right? Like you look in the MLS and there's nothing. So you think, what can I do? Like how can I find an opportunity? I mean, this is not an exaggeration. There in my area, immediate area in Columbus, there are my county outside of Columbus called Licking County. Funny name, but it's called Licking County. That's where Intel is. Under 200 grand, which 4 years ago, you could find house after house after house under 200 grand, no problem. Under $200,000, when I looked yesterday, there were 9 homes for sale. 9 homes. That's it. 3 of them were in a flood zone. So people aren't going to buy those. They've been on the market like over a year. Nobody's going to buy those. But then 2 of them were auctions. And beyond that, there's nothing. So like there's no inventory. And that's what people are struggling with, is finding a deal. So I'm going to put out a couple videos coming up that will cover how I find opportunities, because I don't look on the MLS for opportunities and I don't look on Zillow for opportunities. To me, that is what everybody else does. And that isn't what I like to do. So I've developed a way to find houses, off-market houses, and it's something you can do anytime you want. And you could actually start it the minute you watch my video. Right afterward, you could literally go outside and start this work. And it's effective. It's how I find a lot of clients. It's also how I find about half of the deals I do close, the investment properties that I own, are found via this method. And I have a couple deals working right now that I found via these techniques, including land, commercial real estate, single family houses, multifamily. I found retail, industrial, really whenever every kind of asset you want, you can find via this method. So I won't give it away now. I won't give the secret away now, but coming up, I am going to have a couple videos. So please subscribe, because you're going to want to see these if you're trying to find an opportunity out there and you're frustrated. Again, using just the MLS or looking on Zillow is a losing proposition to me right now. Like that's not exactly where, if you want to find a real opportunity with equity and something that will cash flow you as an investor, or just an opportunity that you can purchase for your family to live in, the MLS and Zillow may not be the way to go. So hopefully by now you're interested in this video, because I think it'll be impactful, and I think it'll help you if you're out there looking for an opportunity and just can't find anything. Anyway, that's what I had today. Thank you for watching this Redfin update. I'll do it again next week. Until then, see you on the next video.